Bloomberg Audio Studios.
Podcasts, radio, news.
Hello, you're listening to Bloomberg UK Politics, your bite-sized guide to the corridors of power. I'm Caroline Hepker.
And I'm Yuan Potts. Now, Caroline, apparently we're all Nigel Farage now.
What?
Now, this is about debanking, and it comes from the former chief economist at the Bank of England, Andy Haldane. He had a really surprising revelation about the number of bank accounts being closed in Britain.
More than 140,000 companies have been debanked across the UK, including me. So I tried to open a bank account last year, and the bank was very nice, very straightforward process. It came back a few weeks later refusing, and they said, your account's been refused because you are politically connected by dint of working for the Bank of England.
Cue the laughter, because of course all the economists in that audience and the policymakers, they understood the Bank of England is not politically affiliated. Yeah. It is independent.
That's the whole point of it.
Yeah, therefore the chuckles. But look, being debanked will get all of the newspaper headlines, I suspect, and I'm sure that was the intention also. But what they might miss is Haldane's bigger argument about the UK economy and our risk aversion. That was the whole point of what he was talking about yesterday. He talked about why stability and stasis is just not enough. The UK and the world must take more risks, and anxiety about change is actually causing us not to change rapidly enough.
Yeah, there is an argument there on pay security and anxiety. Average pay has stood still for the better part of 15 years. And for many, this will be the first generation in a century who end up being poorer than their parents. And the rest of it was pretty bleak as well from Haldane, listing all of the current deep challenges in the world, from climate change to populism and over 100 wars. Yeah.
But on the flip side, he wanted to hold on to the optimism, and he was very buoyant about all the opportunities that they are. He was talking about global trade still growing, the first century dominated by democracies, that levels of income in the world have never been richer, and that we're living longer, and that is a massive opportunity. But he really made this point that I think is at the heart of the whole debate in Britain about the economy now. The government's got to bear more risk. We need more dynamism. He was saying it, from the worker to the company to government, nobody is doing enough and being dynamic enough and changing quickly enough.
Yeah, really interesting that. Just we're not taking enough risks. So it's not a new problem. And in fairness, I don't think it's just a UK problem. It's a problem across Europe. In America, they just have a much better attitude towards risk. People start companies, they fail, they start another company, might fail again. But in the end, they end up starting something which grows a lot of jobs, and we just haven't got that kind of entrepreneurial spirit here.
But actually, how do you change that? Haldane did have some words about the Shadow Chancellor Rachel Reeves' view, Securonomics. He said that, look, it speaks to the first part of the equation, i.e. you do need security, you do need stability, but he said that it doesn't deliver on the kind of aspirational ladder for really, big growth for Britain. So that was his view on Rachel Reeves and the Labour Party that I thought was very, very important. So to Haldane, he says that one thing the incoming government, whoever they are, needs to do is to change the government's fiscal rules. He's called them silly.
Yeah, Haldane says that taking the most important issue, not just for this election, but generationally, is the future direction of Britain's economy and how we get the economy growing. NIESR, the National Institution of Economic and Social Research, makes the point that in the latest Spring Economic Outlook, which they published today, they say the government can't afford to cut taxes and they need to reform the government spending and borrowing rules and they need to invest more. Well, you can speak now to NIESR's Deputy Director for Macroeconomics and Forecasting, Stephen Millard. Stephen, why can't the government cut taxes as Jeremy Hunt wants?
Well, Jeremy Hunt has set himself these fiscal rules that debt must be falling in 5 years' time and that the deficit must be below 3% in 5 years' time as a percent of GDP. If he were to cut taxes, then he would not be obeying those fiscal rules given current spending plans of the government. So he has essentially constrained himself and stopped himself from being able to cut taxes.
You had a 2.5 decade long career at the Bank of England before you moved to NIESR. Andy Haldane says that the UK has been penny wise and pound foolish. What do you make of Andy Haldane's remarks yesterday?
Well, I didn't hear all of his remarks yesterday, but I think there is a sense that by imposing these fiscal rules and ensuring that the government has to meet them, the government's done that via cutting back on spending on, in particular, public investment, and this has been going on for a long time. So, in that sense, they are being penny wise. They're sort of maintaining sound fiscal public finances, but they are being pound stupid because the lack of investment means that we're not getting the growth in the UK economy that we need.
You're not the only person who's unhappy with the government's rules on debt. You're explicitly changing them, calling them to be ditched. Isn't there a danger if we increase borrowing and investment, which is what you're calling for, that the markets just run scared of it all? That's what Liz Truss tried to do, isn't it?
It is. I think the difference is, though, that we would change the whole framework. So we would want to set up a framework where the government of the day could be very explicit in what it was trying to achieve through its fiscal policy and could tell the markets how its spending plans fit in with that. For example, they could say very explicitly that we need to get to net zero. To get to net zero, we need this amount of investment in green technology. They could say we need to invest X amount in skills so that we'll get higher productivity growth and higher GDP in the future. And they could show what this means for the path for debt to GDP, and then take that entire plan to the markets and say, here is our credible plan. And if it is credible, then the markets will lend to them. I think what the markets don't like is a government that says, we're going to cut taxes and there's going to magically be GDP growth that will result from that. Nobody, I think, would lend on that sort of a promise.
No, okay, understood. But I mean, there is some good news. We didn't go into the kind of depths of recession that people worried about. And now even you point out that there are rising living standards now, and that they will also be higher by the next general election. So there is some good news in terms of pay increases as inflation comes down.
Yes, it's of course all relative. So it is certainly the case that the economy is going to grow this year, and after the falls in output that we saw in the second half of last year, that's very, very welcome. As you say, real incomes are now increasing, which was badly needed because they were very badly hit during the period of high inflation. But the background to all of that is that the UK economy has a growth problem. We think the trend growth is only 1%, and that's pretty anemic. And that's where the UK economy has now been for a decade or so.
Andy Haldane says that the central problem is that we just don't take enough risk. Governments, companies, and the rest of us is just not doing enough risk taking. Do you broadly agree with him on that?
I think that's right. We certainly don't invest enough. And investment is all about taking risks, both business investment and also public investment, as we were discussing earlier. The government needs to invest in things that have an uncertain return, but they're not doing it on account of the fiscal rules that we've talked about. But the private sector as well. The private sector needs to invest more. Of course, that hasn't been helped by the large amount of uncertainty that we've had over recent years, particularly around the precise form that Brexit would take. That uncertainty's dissipated a little bit now that Brexit is in place, but it's been replaced by geopolitical uncertainty, which of course doesn't help. But as Andy said in his speech, there is a definite need for businesses to invest, to take the risks that could potentially lead to higher growth in the future.
The question, though, is whether the Labour Party, if they are to become the next government, have a better plan. I mean, Haldane said Securonomics, which is the Shadow Chancellor's sort of economic thinking, the word that she's used to describe it, is that it only takes you halfway there. As Haldane put it, gives you a floor, but it doesn't give you that ladder, that real growth that you and so many others are talking about. I mean, if the Labour Party isn't committed to big investment either, then it won't solve the matter.
Yes, I think the next government, whether it's Labour or Conservative, needs to do two things. I think one is it needs to increase public investment. as we've said, and that requires a new fiscal framework and all of the things that we've already talked about. But it needs to sort of think about how it can work to improve productivity more generally. So thinking very specifically about where the investments might be, the idea of leveling up as a way of increasing productivity across the country as a whole. It needs to think about investment that can bring in, crowd in, if you like, private investment as well. So having some kind of plan, dare I say it, industrial strategy, based around, what can we do to encourage a higher growth rate, both in terms of public investment and in terms of business investment.
You're calling for more debt and for more borrowing. This year, we're probably going to spend about £90 billion on debt interest. Do you worry that there's a limit to how much the government should be spending on debt interest and how much we can borrow? Debt is already about 100% of GDP.
There is a limit in the sense of there comes a point at which people will stop lending to you. But I think with public debt, it's the limit depends really on the credibility of your plan. If you borrow more today to create higher growth in the future, then once you see that higher growth, the debt to GDP ratio will fall. So it's all about how you actually intend to spend the money that you're borrowing, and is that credible? And I should note that there are very different levels of debt to GDP in different countries around the world. Some much higher than 100%, some lower than 100%. It's not clear necessarily where any kind of limit would be, other than in terms of the credibility of the spending.
Stephen, the thing that strikes me is that at a point in the economic history of Britain, when we are in a very grim place by a lot of metrics, your statements, and I think Andy Haldane's statements also, are actually very positive. They are looking at the bright side. They are encouraging about the things. If we just change certain things, we could be in a much better place. Are you that optimistic?
I have to be in a sense. We are in the doldrums. We have been in this low growth equilibrium, it seems, for a decade or so. But there are, reasons to be optimistic. There's the whole green transition, which we have to do anyway. We need to get to net zero, but it is not unreasonable to think that the technologies that will enable us to get to net zero will have spillovers on the rest of the economy. We see advances in AI that simply blow me away in terms of what is possible there. That make me think there's got to be room for productivity growth here. So I think if we can channel investment into the right areas, certainly I could see very good reasons to expect higher growth as a result.
Stephen, thank you so much for being with us. I think we should end on that positive note then. Stephen Millard is the Deputy Director for Macroeconomics and Forecasting at NIESR, the National Institute of Economic and Social Research. Look, I really like this idea, the message that change is good, change is life, it's growth, it's prosperity. We've got to do more of it.
Yeah, I do think, though, that sceptics on the right will say that it's all very well to talk about more government investment with a right plan. You can borrow more so long as there's a plan. But governments often get the plan wrong, don't they? And the danger is that we borrow loads of money and it's invested badly and then we're just left with a load of debt.
OK, that's it from us for today. If you like the programme, don't forget to subscribe. Give it 5 stars so that other people can find it on Apple Podcasts, Spotify or wherever you listen.
This episode was produced by James Wilcock and our audio engineer was Sean Gostamacchia. I'm Yuan Potts.
And I'm Caroline Hepker. We'll be back with more tomorrow. This is Bloomberg.
Bloomberg UK Politics. Listen weekdays at noon on DAB Digital Radio in London.